The rand has been trading with a stronger bias. We've seen a little bit of weakness filter through this morning, but it seems that it's still that high-yielding appeal that's keeping things buoyant for the local unit, even if we do see temporary dip backs.
Good morning. Yes, absolutely. I think you've hit the nail on the head right there. South Africa's yield differential does still remain quite high in comparison to other developed markets and even some emerging markets. And so we've seen the rand maintain its strength.
Well, this despite the government's efforts recently to try and tilt the currency lower. What are you making overall of government's attempts right now? The latest move, of course, being the easing of exchange controls to offset the kind of inflows we've seen into the country.
Well, government has obviously reiterated its commitment over the months to try and stem the rand's strength, and we've seen we've seen the Treasury step up its deposits with the Reserve Bank, and in turn we've seen the Reserve Bank try and mop up dollars in the market. But I think one has to remember that the size of the currency markets makes any sort of active intervention by the Reserve Bank very difficult. So I think that they're doing what they can on their side, but there's simply no way that they would be able to make a meaningful impact given, I think, the extent of inflows into the South African market.
Of course, it's within this context that we saw Merrill Lynch out with a report highlighting that it expects higher inflation for South Africa as we move into next year. And with that being the case, expecting interest rates to climb as of September next year, with the second interest rate on the cards for December in their books. What's your view on that? Are you in consensus with that line of thinking?
No, that doesn't reflect our line of thinking at all. We're also expecting inflation to tick up, but moderately throughout 2011. So our forecast is for rates to remain on hold throughout the year. And we think that this is mainly because the Reserve Bank continues to look at factors other than inflation when making its monetary policy decisions. And we don't see growth taking off in a big year in 2011 at all. So the combination of some still weak growth and moderate inflation throughout the year should see the Reserve Bank keep rates on hold, and at the very earliest we'd be looking for an interest rate hike in 2012.
Well, a lot of the rand strength that we're seeing at the moment also on the back of dollar weakness that's filtered through, and there's a fear out there that we could see the devaluation of the dollar on the back of a loss in confidence if the US carries on printing money. Nomvuyo, what's your view or outlook on that front, especially with data over the recent past coming in more positive than the markets had expected over in the US?
Yes, absolutely. I mean, the dollar has been weak for most of the year, and I think it's really to do with firstly with quantitative easing, the first round, and then after that expectations of quantitative easing, and then of course they followed through with the second round of quantitative easing. So the dollar certainly isn't being helped either on a fundamental basis or by the fact that the Fed is printing money, and they've in fact been roundly criticized by a number of foreign players for doing that. So certainly the prognosis for the dollar isn't great when looking at a trade-weighted basis or perhaps against a range of countries. But if you look specifically at the euro dollar, then we would expect that the dollar to come back against the euro and to continue strengthening, because we don't think that the sovereign debt concerns in the euro are going to go away anytime soon. And with the poor growth prognosis over there, we don't see any meaningful recovery in the euro either. So the dollar should continue to perform relatively poorly against most emerging market currencies and some developed market currencies, primarily the Australian dollar. But we see the dollar performing faring relatively better against the euro.